In 2023, we saw increased interest rates and higher prices, putting extra pressure on both dealers and consumers. Today, we have an expert to shed some light on the state of the market from an investment banker's perspective. We are joined by JT Taylor, the Managing Director of Automotive for Truist Securities. JT, thanks so much for joining us on the show.
Jim, it's always a pleasure. You guys do a great job of keeping the industry informed on the latest trends and also the remarkable events that are going on today.
Well, thank you for those nice comments. We try. So talk to us about the state of retail automotive today. What's your assessment?
Well, our assessment is still ultra positive. You know, the business model, 115 years in existence, is still working and working well. And as we both know, it's driven by those entrepreneurs that own the vast majority of those dealerships.
Right.
But when you include the large corporate entities like AutoNation, Lithia, et cetera, that own car dealerships, there are a lot of incredibly diverse and important headwinds that they're all facing, but very opportunistically.
Sure.
We are definitely seeing dealers lean into making investments in technology that works. Mm-hmm. I think you and I have both seen AI come to the forefront on a lot of initiatives, and there's a lot of investment money that people would like to put to work in the greatest retail business in the world.
That's
automotive retail.
That's right.
We'll continue to see that.
Let's change gears for a second here and talk about the buy-sell market for dealerships. It seems to be still holding strong, although I've heard that the numbers are starting to come down a little bit for some of these huge sales that we've seen because of the business and the gross profits, net profits also being negatively impacted by rates out there and some of the things that are in the economy that have just slowed business down a little bit. So talk to us about that.
Well, business has slowed down some, but you've also heard that the average selling price on a new car is still above MSRP.
Yeah.
So the buy-sell market, that's underlying multiplier. The profitability of a business is going to be compressed some in 2024. Mm-hmm. The fourth quarter has gave us kind of a picture that of what 24 may look like. There were, the public companies definitely gave us an indication of that there was a reduction in overall profitability for their portfolios. Mm-hmm. Private portfolios have been a little more resilient, Jim. So the private dealers are doing a better job with what they haven't felt that impact quite as seriously as what the publics have.
Interesting.
That's what our numbers are showing in the Truist portfolio.
Yeah.
Our clients, 818 dealers that call our bank their commercial lender. Mm-hmm. We also believe that the overall health of the consumer is still very good. We're seeing that in the performance of our auto loan portfolio, $36 billion strong at Truist. And it's doing well.
Yeah. Wow.
At all levels, frankly, at all levels of the credit spectrum. Mm-hmm. There are fewer deals at the lower end of the credit spectrum because of the impact of higher interest rates. But at the same time, we believe that based upon performance of what we're seeing and the other indicators that the economy throws off, housing is improving, mm-hmm. starts and existing home sales, and credit card delinquencies are fully in line with what expectations are. There's nothing unusual going on there. So as long as we
all indications are that 2024 is going to be another good year.
I think it is.
Yeah.
We heard that from our friends at J.D. Power, our friends at Cox Automotive, who stay on top of this as a matter of course on a weekly and monthly basis.
Yeah.
It's there's a lot of great data out there that says, hey, the fourth quarter was the rationalization of that golden age of business that we came down from, but it's still pretty darn good.
It is.
And considerably better than 2019.
Sure. Are there any particularly strong franchises out there that rise above the others when you get calls to say, hey, we want to pick up a store, and is it Porsche, is it Toyota, is it some of the usual suspects?
Well, those are good. Those are going to be strong stallions in your no matter what.
Yeah.
They're going to perform.
Sure.
Porsche and Lexus kind of go neck and neck with being the most valuable brand value out there. Toyota has significantly
Yeah.
come up, and some of that's because what we saw with their strategy on
EVs.
electrified vehicles.
Yeah.
The hybrid is really what's desirable
Yeah.
by consumers, and it's working for them. They've got great selection and great product. They're able to build them in enough quantity
Yeah.
to keep Toyota dealers happy about that. And Toyota is coming very close to that Lexus Porsche value status. They've probably gone past the other European brands in market value. Will that last forever? We don't know, but it certainly is going that direction. They're the biggest mover, along with another volume franchise, Kia.
Yeah.
Kia had
Another great brand.
Yeah, they've done a great job of improving their brand image. Their products are excellent from a styling and from a quality standpoint.
Sure.
The dealers have upgraded their locations. Kia is on every shopping list that we have from any major consolidator.
Yeah. Conversely, Ford is not too favorite out there right now, right?
Yeah, it is. I think it's a communication issue, and we both know. You've made a great living communicating well benefits of business, and they need to do a better job of just keeping the dealers informed of the direction that the company genuinely believes it should go.
Sure.
Ford dealers are excellent business people.
Yeah.
The value of a Ford store has, we believe, temporarily, it's a little behind their major competitor, Chevrolet. Conversely, Jim, to the Ford story, the Chevrolet story is outstanding, and dealers are really embracing it. Now, as they get more electrified vehicle availability, we'll see how that goes. But
sure.
Chevrolet has definitely moved up on people's list as well in a value status.
So it would seem to me that you're going to get calls from dealers that say, listen, a Ford dealership might be a deal today, because we know that Ford's such a strong brand. They're going to figure it out. They're going to come back around. And it's kind of one of those things where, if I could pick up a Ford store for $10 million versus a Toyota store for $30 million, maybe my money's better spent with that Ford store for a lot less money, and then kind of not wait things out, but understand that they're going to come back around and it's going to be in favor again.
Absolutely agree with you, Jim.
Yeah.
That's a great strategy. Larger groups are approaching it that way.
Yeah.
And Ford will remain on people's shopping lists, as it should.
Sure.
For the reason you just said. The other domestic stalwart are our friends at Stellantis, CDJR.
Mm-hmm.
Kind of stubbed their toe here in the last year and a half with a mismatch of price points versus product desirability. Yeah. Jeep has discovered that the market does not think they are Land Rover.
Right.
They're Jeep.
Right.
And they'll make those adjustments. Ram pickup is still an outstanding offering, and as they rationalize Dodge and Chrysler brands with their electrification strategy, we think CDJR's values, while they're depressed today, are a good buy as well.
Yeah, fantastic. So the business continues to roll on, no pun intended. JT Taylor, Managing Director of Automotive for Truist Securities. Thank you so much for joining us on the show today. Very much appreciated. Thank all of you for watching. We're streaming now on Roku and Apple TV as well, so check that out. So until next time, JT, stay well, and love to do a follow-up with you as the year moves along.